Hello everybody, Cantonese Cat here. This is the monthly chart of Bitcoin as the price went parabolic over the last few months as we have clearly developed a bull trend and break ourselves out from a pretty bad bear market. The question is this: when is the top? Where is the top? Where's the price target? Where to take profit at? How far is this bull cycle going to go and how long is it going to last? I don't think there's going to be a single indicator that's really going to be able to tell you. Matter of fact, I'm not even sure if that is really the question that you should be asking, because if you're asking to try to optimize and, really try to make it perfect in terms of trying to time the bottom and trying to time the top, I don't think you need to do that to make a lot of profits from it. Matter of fact, I think trying to do that sometimes is a little bit dangerous because it gets you into the mindset that there's something that you have to keep chasing and that there's always something that you are going to want to avoid from making a loss if you're not able to time the bottom right. When the reality is it doesn't really matter. Let's say if you, for example, like, this cycle over here, let's say if you entered at, 400 bucks, didn't really time the bottom. Bottom is probably closer to like 170, 160. Let's say if you enter Bitcoin at like 400 bucks. And you're like looking at up here, like, what, this big giant candle right here, I think that's probably the top. Yeah, okay, it made some, highs here, but I'm not sure about this. I'm going to really look for, some kind of exit strategy here. I'm going to end up selling here at like, 3,000, right? You still make several hundred% gain. And even if you don't make that little extra top right here, so what, right? Not every single cycle has to have a blow off top. The last cycle didn't. It kind of have like a little blunted double top here. Not every single top has to go like that, right? So I think the key is really not to try and time the bottom exactly and try and time the top exactly. If you're able to do that, great. I think that you might be lucky if you're able to do that. I don't think you absolutely need to do that to make a lot of money from it. And the bottom line is this: I'm going to go for a few indicators. I'm going to go for the caveat in terms of whether or not they can really tell you the time the top, time the bottom, and if not, what can they tell you? So the Bollinger Bands, this is a monthly chart, so the Bollinger Band is going to be showing you a basis of a 20-month moving average right in the middle. A couple things. One is, if you look at the last couple of cycles, it does seem that if you have many consecutive candles that closed above the upper Bollinger Band, that's usually a sign that you might be getting close to your top. So for example, down here, you really don't have that many candles that close above the upper Bollinger Band consecutively, right? You have one here, this one closed back to touch the Bollinger Band. A few months not doing that. 1 month here above, 1 month here. It did kind of close above that. So second month, third month closed above, fourth month closed below, right? It's not really up until here. That's when price consistently closes above the upper Bollinger Band. So you have candles, really candles number 1, 2, 3, 4, 5, 6, 7, 8, 9. On the ninth candle, that's when you have a top. It also completed with, a very nice tweezer double top kind of appearance. That's not a tweezer top kind of appearance here, where the tweezer. This is a tweezer right here. So that's generally a pretty toppy kind of look. It had a very similar look over here too. Now, if you say, okay, if you see multiple candles back to back together, do you know it's going to be 5 candles? You know it's going to be 6 candles? Or going to be 9 candles, 12 candles? When it closes up for Bollinger Band, that's going to be the top. Is that going to be top right there? Is that going to be top right there? I don't think anybody really knows the answer to that question. Matter of fact, if you look at the last cycle, it closes about the upper Bollinger Band, number 1, 2, 3, 4, 5, 6, 7 times. So is 7 times the charm? Is 9 times the charm? I don't know. All I can say is, as price consistently closes above the upper Bollinger Band, it's sucking in a lot of liquidity. And at some point, the liquidity sucking in is going to end. You're the big money who bought down there have already been looking for exit plan, and you can only suck up so much liquidity from retail. So at some point, the party's going to end when it goes parabolic like this. The question is, we just don't know when it's going to be. The higher it goes and the more parabolic it looks, the more number of candles that closes outside the upper Bollinger Band, the riskier it is. So let's say, for example, you can set yourself a rule. Like, let's say if the price closes above six times 6 months of 6 candles worth of monthly candles, closes above the upper Bollinger Band, you're gonna sell, right? So 1, 2, 3, 4, 5, 6. You can sell right there. Okay, that's not bad. You don't really worried about this big giant drop right here, but they also didn't really make the gain with these last 3 candles there either, which is fine. I think the most worrisome thing is if you sell right here, there's a big giant candle next month, and you FOMO back in, you put more money back in right around here, and then you end up losing a bunch of that from that, even though your original took profit down here. That's painful. So it's tough to really call the top here. I think you have to have a plan. If you exit here, don't come back. Understand that if the price goes up higher, it just means that it's riskier and you shouldn't put more money back in, right? Again, none of this is financial advice. I'm just kind of telling you in terms of thinking here. Higher it goes, more parabolic it goes, more it closes on above the upper Bollinger Band, the more irrational it is, the more likely the price is going to come down and the higher risk it is. So, the current cycle, what do we have so far? I mean, I want to say this is still kind of closing inside the upper Bollinger Band, but it's hard for me to tell for sure. Matter of fact, I think it actually closes a little bit outside. How many candles do we have so far that's closing above the upper Bollinger Band? 1, 2, 3, 4. Is the bull market going to end in a couple months? Unlikely, because the 20-month moving average has just started to slope up just a few months ago. We're really talking about maybe like 3 months ago. When it starts to upslope like that from last year, it went on for, really, if you count the bull market ends with the top all the way over here, it really ends over, like 15 to 18 months. Same here. When it got upsloped just like that, bull market ends on, let's see, so December 2017, July 2016, we're talking about another 18 months of just keep going up after this has happened. So I don't know, man. I mean, I think that this is a potential strategy. You should always be cautious, and because of how much is closing above the upper Bollinger Band here, there could be a pretty sizable correction before continuation. I don't know. I mean, I think that this bull trend probably has a ways to go, especially since the Bollinger Band has just expanded. It looks like it just expanded over here, right? And it looks like it just expanded down here. So it might still be quite a while before we get to the top. But it doesn't really help you time the top. That's the thing. Nothing really helps you to time the top exactly. And I'm okay letting it go. I'm okay not looking for that. One other thing that is often something that is good to look at is to see signs of, exhaustion. With seeing signs of exhaustion, sometimes you get, sometimes you don't. You have a sign of exhaustion from here to there, for sure. On the double top from the last cycle. The double top right here is coincided with a decreasing RSI, so this is pretty classic bearish divergence going on over here. The hump higher high really here over here is very, very much exhausted. And when you see something like that, that's also difficult too, because that doesn't really help you exit. Even if it goes down, it could still push up, and it can actually, if the price is impulsive enough and it breaks this RSI downtrend on the monthly, it could actually negate the bearish divergence and it can keep going up. That's the trouble. Like, you can see signs of exhaustion, but there's no guarantee. It is very, very, very tough to look at that. Instead of looking for that, another thing to look at here, like there's not really any sign that the trend is exhausted besides just that it went parabolic. And when it went down, it just keeps going down. Like there's nothing that gives you any idea in terms of when the downtrend is going to stop. And all of this actually, if you're experiencing this over here, actually happened quite quickly. So the Bollinger Band and the bearish diversions looking for exhaustion, they help some, but they're not always going to be there available for you, and they don't really tell you exactly where the top is going to be. If you look at the weekly chart, I want to show you something that may be a little bit more helpful in terms of trying to figure out where the top is for Bitcoin anyway. So this is the bull market support band. Price has been pretty much respecting the bull market support band. I think this is particularly helpful when it comes to Bitcoin. On this cycle here, downtrend, downtrend, rejection, rejection, uptrend, uptrend, support, support. When it really becomes resistance is when you know that the bear trend is happening. The issue with waiting for that to happen is that really hasn't happened at its all-time high. You could have stayed here throughout the whole entire time, and for all you know, there could be some continuation over here too. When it bounced from here, what really gave it away is when it bounced below, when it broke through below, and went back for a back test. When it went for a back test, there's no guarantee that there's no guarantee it's going to serve as rejection either, because it's still a little bit upsloping, even though it's starting to roll over. So if you have exited here, if you were to bot down here, you would exit here, you would still make the significant amount of gain. You just didn't time the top, which honestly I think is fine. If you didn't really make the move over here, you went down and you went back up here. If you didn't make the move here, then you're just not a trader, you're just an investor at that point. The bull market support band has been very, very good when it comes to parabolic bull trend. Over here, it didn't even really touch it as support, it just kept going up. When it broke down, everybody got scared because it's negative sloping and it's a back test. There's no guarantee it's going to get passed through. It passed through back then, touch it, went back above. You see how this has tricked a lot of people. And then as it went back above, it went back down and back tested it and it broke through it again. You see how this can trick a lot of people, because of what happened here, everybody thought this was going to happen again. It didn't. It back tested that. This would have been a perfect exit point because the bull market support band was very, very negative slope. This would have been a perfect exit point right here. But because of what happened over here, with price pushing back up, you think how many people here are waiting? I was waiting. I was thinking there's a potential for it to break through. Of course, the probability is low because the bull market support band is negative sloped. It just served as rejection all the way down. That would have been a good exit point. You don't have to time the top, but that would have been a good exit point. You don't have to time the top here. That could have been a good exit point. If you exited right there, you could have beaten yourself up over the next year. Because at this point, who knows, price could go a lot higher. The bull market support band is pointing up. There's a potential for price to go up a lot higher. So if you were to sow there, which would have been the right thing to do, you're experiencing a lot of pain over the next year. It's very, very tough, but this is how the Bollinger Band can help you with an exit strategy. What I suspect is the price will continue to go up much, much higher. At some point, it's going to break down underneath the bull market support band again. And then at some point, it's going to end up doing a back test. At some point, it's going to end up doing a back test. And those back tests are probably the best places for you to exit, because nobody knows how far this is going to go up. But when it goes down, you know that it goes down. You know that there's already a lot of technical damage done. Even if it bounces up again, it may not bounce up that high, and would be a very good exit strategy right at the back test of this bull market support band. This is probably one of the more helpful things to really look at, to be honest, because the rest of the stuff, like, you really don't know. Like, the rest of the stuff, you're talking about things like Fibonacci level from all-time high to all-time low. You're trying to estimate this cycle here ends a little bit above, the 3.618 level, but the cycle before that and a lot further, top, bottom, the cycle before that went beyond all these levels right here. So you really just don't know. Like, all of this Fibonacci level can give you a clue in terms of where potential profit zones and potential support zones could be located, but didn't really tell you exactly as to when the top would be and how far it would go. It's tough. These things are very tough. Another thing that can help you a little bit better is you can try to time the cycle based on your understanding of how long a cycle usually would last. For example, if you would have seen the bottom, right around here, and the bull market could be, anywhere from 18 to 24 months, then you basically can time, once you get to about like 18 months or so, maybe you should start taking the chip off the table, right? Same thing from the bottom over here. 18 months, you're talking about right around here. It might be a good time for you to take money off the table. And then from the lows over here, you're talking about, so far only been about a year. Maybe there's another 6 to 12 months that keeps going up. I don't know. Maybe there's longer. Because if that's the low right there, if this cycle here looks anything like this cycle over here, which is starting to look more and more alike, you're talking about from the lows here on August 2015 to December 2017, you're talking about 26 months. From here, 26 months, another like 12 to 18 months away. Well, another 12 months away. So you're really talking about potentially, pretty longer move here. Time of the cycle can help. The other thing that could potentially help, and it's not something that I really look at it that often. This is something that a lot of people look at quite often, actually, but it's not something that I personally look at very often. You can look at the Bollinger Band on the monthly for the Bitcoin dominance. It's basically telling you the percentage of the crypto market is Bitcoin in terms of market cap. And what you're seeing here is a little bit complicated, but not too complicated. When things really started to get parabolic on the last bull run, you're talking about the Bitcoin dominance initially gone up on the big move, but then after a while it actually went down. Now, the top of the last Bitcoin cycle, if I can go back over here, the top of the last Bitcoin cycle is around November 2021. And the bottom, was a lot further. It was like, January 2019. So between January 2019 and November 2021, we'll look at the Bitcoin dominance again. And I think this could potentially help you to time the market a little bit better if that's something that you're interested in doing. From 2019, Bitcoin dominance initially, as Bitcoin goes up, Bitcoin dominance also goes up. After a while, Bitcoin actually becomes less dominant as you have other altcoins that have liquidity from Bitcoin flowing to them. And you're actually going to have this kind of slope right here. And then around September 2020, which is just a couple of months before, is final Bitcoin top for the last cycle. it probably has hit its trough right here. And only spent a couple of months trying to backtest that level. And that backtest right there of this Bitcoin dominance may be a potential clue that it could be time to exit. So over here, what's happening is this is the initial, Bitcoin bull market as it goes up. We're kind of seeing a very similar thing here. There's an initial bull market here for Bitcoin as it goes up. At a certain point, there's going to be a lot of money being rotated to altcoins, Ethereum, Solana, and everything else. At a certain point, I expect the trend to go down and break down through this rising 20-month moving average. It's going to start crawling, and this is going to start breaking down. You can also already see that this uptrend here is already starting to get a little bit exhausted. I think money is going to start probably pouring out to altcoins in a pretty significant way sometime soon. Whereas you see the 20-month moving average keep on pointing up, but as this rolls over, that could also potentially roll over and create vulnerability for it to break down. And when it breaks down, it's going to take many, many months to break down as liquidity flows away from Bitcoin to altcoins. But Bitcoin could still be rising up. And when it gets to a point where it really starts to have a trough, and then when the 20-month moving average of the Bitcoin dominance start to roll over, that might be a time to look at potential exit where you could have the last little punch to try to push Bitcoin up a little bit higher. Bitcoin dominance can go a little bit higher. You could back test it, even pass through by about a month or so. But I think this back test here is probably potentially a good area where you might want to exit. There's not that much data from the cycle before, unfortunately, because the cycle before Bitcoin dominance is like close to 100%. As more altcoins come, that's when you might start seeing these kind of patterns right here, and this could potentially give you a clue on the back test right here after a breakdown of Bitcoin dominance on the 20-month moving average. That might be a good area for you to maybe potentially consider start exiting. We're already seeing kind of exhaustion in this trend right here, which is basically the same thing that we're seeing here. I'm thinking this is going to go down over the course of the next 12 to 18 months. Eventually it's going to make a back test, and I think that could be potentially a pretty decent signal for that. So there are a couple of things to look at that might be helpful. Another thing to look at, I'm just going to go back to the Bitcoin chart over here. I'm going to take out the Bollinger Band. Another thing to really look at when it comes to Bitcoin is there are these special indicators that are available. There's this MVRV Z-score that has been created, and that actually has been quite accurate. When the MVRV Z-score is below 0, generally it tells you that Bitcoin has bottomed. That has proven to be correct here at this cycle. That's proven to be correct here at this cycle. And that also been proven to be correct around here in this cycle. People also use the MVRV Z-score to try to figure out the top. In this particular version of it, it does seem that whenever the score is above a 4, when it gets closer to like a 5, that's when the top happens. When it gets to, again, about 4 to close to 5, that's when the top happens. Now, some people call the November top here the top on the last cycle in 2021. But in reality, I think that the true top is probably closer to here around March of 2021. The score is, pretty high, and it coincides with this top right here. I think if you were taking profit right here when it gets closer to 5, you would have done great and just not look back until it goes back down to 0. Now, this is just a model. Every model has a chance of getting broken, but so far this is one that has been studied pretty well in the Bitcoin community. And then the final one that I want to show you is the pi multiple, or also known as the pi cycle Bitcoin indicator. There are actually quite a few version of that. I actually like the Bitcoin Pi multiple better. So I'm going to take myself off of this one here. And I'm going to search for the Pi multiple here. And it gives you this piece of data here. Basically, if the Pi multiple, which is based on a number of different moving averages, if the Pi multiple is above 0, it is no longer negative, that's when you're really looking at the top. So here it called the top right here. Here it called the top right here. And also here it did call the top right here, didn't it? And I think this really looked like, from multiple metrics, that looks like to be the true top. And if you move over here, as you can see, we're really nowhere near 0 at this point. So I feel like the rally still has room to go up. Again, every single ball has a chance of getting broken at some point, but you know, this is a pretty decent score to look at. I just showed you how to pull it up. Anyway, I just want to let you know, oh, one last thing I want to show you. Some other people also look into this trend line here too on the monthly for the RSI. If you pull back all the way back here, there's a trend line that people draw all the time from the top. Presumably, if the monthly RSI hits, you know, around like 80, 89 range into top of this trend line, that could be where it tops. By the time when it gets there, price could be a lot higher. But this is just an idea. Just like the MVRV score, just like the Pi multiple, just like the number of, you know, candles, monthly candles that closes about the upper Bollinger band, just like the exit strategy using the bull market support band backtest after breaking down. All of these are speculative. You're trying to time the market here. You're going to use some kind of speculation, and it doesn't always work. But it's important to see what has worked before, which tells you what might work again. Thank you for listening. Bye.